Hey guys, sorry, that was a blooper intro. That's fine. So today we will continue building the portfolio. Maybe I'll work on experience section today. So yeah, as usual, I'll be listening to Lex Fridman podcast. It's pretty long, like 4 hours. I don't know when I'll finish that, but I guess by the time I finish this portfolio, I'll be done with that. So I managed to finish Navbar Hero and project section. So let's continue. So this is the progress so far. This is what I have done. I haven't updated the content, but we'll do that later on. First, we will get the layout done. So once the layout is done, we can focus on focus on contents, then responsiveness. Awesome. So yeah, let's get started.
I mean, you will eat and you will die. You'll starve to death. So the lack of property rights is like being a type 1 diabetic. And so if you look at most people everywhere in the world,
Why this is hanging?
they don't have property rights. They don't have effective bank. And they don't, and they're current.
I don't know, for some reason it's quite lagging. No data. What?
Does it last forever and does it orbit forever, or does it go up and come down and burn up? Right? And I think Jack is interested in, putting freedom in orbit, right? Putting freedom in orbit. And he said it many times. He said, this is the internet needs a native currency.
Yeah.
Right? And no political construct or security can be a native currency. You need a property, and you need a property that can be moved 1 million times a second. Can you oscillate it at 10 kilohertz or 100 kilohertz? And the answer is only if it's a pure digital construct, permissionless and open. And so I think he's enthusiastic as the technologist, and he's enthusiastic as a humanitarian. And what he's doing is support both those areas. He's supporting the Bitcoin and the Lightning protocol by building them into his product. But he's also building the applications which you need at the Cash App level in order to commercialize and deliver the functionality and the compliance necessary. And they're related.
And I should also say, he's just a fascinating person. For a random reason that I couldn't even explain if I tried, I met him a few days ago and gave him a great big hug in the middle of nowhere. There's no explanation. He just appeared. That's a fascinating human. His relationship with art, with the world, with human suffering, with technology is fascinating. I don't know what his path looks like, but it's interesting that people like that exist. And in part, I'm saddened that he no longer is involved with Twitter directly as its CEO, because I was hoping something inside Twitter would also integrate some of these ideas of what you're calling digital energy, to see how social networks, something I'm really interested in and passionate about, can be transformed. Let me ask you, just for educational purposes, what's the? Can you please explain to me what Web3 and the beef between Jack and Mark Andreessen is exactly? Did you see what happened? Sorry to have you analyze Twitter like it's Shakespeare, but can you please explain to me why there was any drama over this topic?
First of all, Web3 is a term that's used to refer to the part of the economy that's token finance. So if I'm launching an application and my idea is to create a token along with the application and issue the token to the community so as to finance the application and build support for it, I think that that's the most common interpretation of Web3. There are other interpretations too, and so I'm just going to refer to that one. And I think the beef, in a nutshell, not articulated, but I'll articulate it, is whether or not you should focus all your energy creating applications on top of an ethical digital property like Bitcoin, or whether you should attempt to create a competitor to it, which generally would be deemed as a security by the Bitcoin community. So I'm going to put on my Bitcoin hat here.
Yeah.
Right? All the tokens that if it's driven by a venture capitalist, well, it's a security. If there's a CEO and a CTO, it's a security. All these projects, they're companies foundations are companies, right? If you call them a project or a foundation, it doesn't make it not a security. They're all, in essence, collections of individuals that are issuing equity in the form of a token. And if there's a pre-mine, an ICO, a foundation, or any kind of protocol where there's a group of engineers that have influence over it, then to a securities lawyer or to most Bitcoiners, and definitely to anybody that's steeped in securities law, you look and say, well, that passes the Howey test. It looks like a security. It should be sold to the public pursuant to disclosures and regulations, and you're just ducking the IPO process, right? And so now we get back to the ethical issue. Well, the ethical issue is if you're trading it as a commodity and representing it as a commodity, while truthfully it's a security, then it's a violation of ethics rules and it's probably illegal.
Well, you keep leaning on this. Let me push back on that part.
Yeah.
Maybe you can educate me. But you keep leaning on this line of securities law as if it, with all due respect to lawyers, as if that line somehow defines what is and isn't ethical. I think there's a lot of correlation, as you discussed, but I like to leave the line aside. If the law calls something a security, it doesn't mean, in my eyes, that it is unethical. I mean, there could be some technicalities, and lawyers and people play games with this kind of stuff all the time. But I take your bigger point that if there's a CEO, if there's a project lead, that's fundamentally, that to you is fundamentally different than the structure of Bitcoin.
It's not that creating securities is unethical. I created a security. I took the company public, right? That's not the unethical part. It's completely ethical to create securities. Block is a security. All companies are securities. The unethical part is to represent it as property when it's a security, and to promote it or trade it as such.
This whole promotion, that's also a technical thing, because what counts as not as promotion is a legal thing, and you get in trouble for all these things. But that's the game that lawyers play. There's an ethical thing here, which is like what's right to promote and not. To me, propaganda is unethical, but it's usually not illegal.
If you roll the clock back 20 years, right? All the boiler room pump and dump schemes were all about someone pitching a penny stock,
Sure.
Selling swampland in Florida. And if you roll the clock back forward 20 years and I create my own company and I represent it as the same thing and I don't make the disclosures, right? You're just one step removed from the boiler room scheme.
Yeah.
And that's what's distasteful about it. There are ways to sell securities to the public, but there are expectations. Maybe we could forget about whether the security laws are ethical or not, right? I will leave that alone. We'll just start with the biblical definition of ethics.
Yes.
Don't lie, cheat, or steal. So if I'm going to sell something to you, I need to fully disclose what I'm selling to you, right? And that's a matter of great debate right now. And so I think that's part of the debate. But the other part of the debate is whether or not we need more than one token. Like, we need at least one, right?
Yes.
We need at least one digital property,
one is better than
because zero means there is no digital economy.
Yes.
And by the way, the conventional view of maximalists is they think there's only one and everything else isn't. That's not the point I'm going to make. I would say we know there is at least one digital property, and that is Bitcoin. If you can create a truly decentralized, non-custodial, bearer instrument that is not under the control of any organization, that is fairly distributed, then you might create another or multiple, and there may be others out there. But I think that the frustration of a lot of people in the Bitcoin community, and I share this with Jack, is we could create $100 trillion of value in the real world simply by building applications on top of Bitcoin as a foundation. And so continually trying to reinvent the wheel and create competitive things is a massive waste of time, and it's diversion of human creativity. It's like we have an ethical good thing, and now we're going to try to create a third or a fourth one. Why?
Let's talk about it. So first of all, I'm with you, but let me ask you this interesting question, because we talk about properties and securities. Let's talk about conflict of interest. You said you could advertise public. You have a popular Twitter account. It's hilarious and insightful. You do promote Bitcoin, in a sense. I don't know if you would say that, but do you think there's a conflict of interest in anyone who owns Bitcoin promoting Bitcoin? Is it the same as you promoting the farming?
I would say no. There's an interest. I think that you can promote a property or an idea to the extent that you don't control it. I think that the point at which you start to have a conflict of interest is when you're promoting a proprietary product or a proprietary security. A security in general is a proprietary asset. So, for example, if you look at my Twitter, you will find that I make lots of statements about Bitcoin. You won't ever see me making a statement that, say, MicroStrategy stock will go up forever. Right? I'm not promoting a security MSTR because at the end of the day, MSTR is a security. It is proprietary. I have proprietary interest in it. I have a disproportionate amount of control and influence on the direction.
The control is the problem. The control is the problem. Because you have interest in both. You can if Bitcoin is successful, as we're talking about, you are very possibly can become the richest human on earth, given how much you own in Bitcoin, right? The wealthiest, not the richest. I don't know what those words mean.
I would benefit economically.
You would benefit economically.
That's true.
So the reason that's not conflict of interest is because the word property, that Bitcoin is an idea and
It's because
Bitcoin
I
is
don't
open.
own it.
You don't.
I don't control it. In essence, the ethical line here is: could I print myself 10 million more Bitcoin or not? Right?
Or can anyone? Right? It's not just you. It's can anyone? Because can you promote somebody else's? Yes, I guess you can. Like if you can promote Apple.
It's
when you
like
have no stake.
you could have a Twitter account where you promote oil, or you promote camping, or you promote family values, or promote a carnivore diet, or promote the Iron Man. Right?
You're not going to get wealthier if you promote camping, because you can't own a staking. I mean, you own a lot of Bitcoin. What is that? Don't you own a stake in the idea of Bitcoin?
I would grant you that.
But the lack of control is the fundamental ethical line that you don't have. All you are is you're a fan of the idea. You believe in the idea and the power of the idea.
Yeah, I think
you can't take that idea away from others.
Let's come back to. Let me give you some maybe easier examples. If you were the head of the Marine Corps, right, and someone came to you and said, "I created Marine Coin," and the twist on Marine Coin is I want you to tell every Marine that they'll get an extra Marine Coin, when they get their next stripe. Mm-hmm. And then I'm going to give you, and I'm going to let you buy Marine Coin now. And then after you buy Marine Coin, I want you to promote it to them, right? At some point, if you start to have a disproportionate influence on it, or if you're in a conversation with people with disproportionate influence, it becomes conflict of interest. It would make you profoundly uncomfortable, I think, if the head of the Marine Corps started promoting anything that looked like a security. Now, if the head of the Marine Corps started promoting canoeing, you might think he's kind of wacky, like that's kind of a waste of time and distraction. So, but to the extent that canoeing is not a security, not a problem unless ultimately the issue of decentralization is really a critical.
So not having a head.
One.
So is it something? Can Bitcoin be replicated? So all the things that you're saying that make it a property, can that be replicated?
I think it's possible to create other crypto properties.
Does the having a head of a project a thing that limits its ability to be a property if you try to replicate a project? Is that the fundamental flaw?
I think the real fundamental issue is you just never want it to change. If you really want something decentralized, you want a genetic template that substantially is not going to change for 1,000 years. So I think Satoshi said it at one point. He said the nature of the software is such that by version 0.1, its genetic code was set. If there was any development team that's continually changing it, on a routine basis, it becomes harder and harder to maintain its decentralization, because now there's the issue of who's influencing the changes. Yeah. So what you really want is a very, very simple idea, right? The simplest idea. I'm just going to keep track of who owns 21 million parts of energy. And when someone proposes big functional upgrades, you don't really want that development to go on the base layer. You want that development to go on the layer 3s, because now Cash App has a proprietary set of functionality and it's a security. And if you're going to promote the use of this thing, you're not going to promote the layer 3 security, because that's an edge to a given entity and you're trusting the counterparty. You're going to promote the layer 1, or at most the layer 2.
Okay, so one of the fascinating things about Bitcoin, and sorry to romanticize certain notions, but Satoshi Nakamoto, that the founder is anonymous. Maybe you can speak to whether that's useful, but also I just like the psychology of that, to imagine that there's a human being that was able to create something special and walk away. So first, are you Satoshi Nakamoto?
I'm certain I'm not.
No,
I think the provenance is really important. And if I were to look at the highlighted points, I think having a founder that was anonymous or pseudonymous is important. I think the founder disappearing is also important. I think that the fact that the Satoshi coins never moved is also important. I think the lack of an initial coin offering is also important. I think the lack of a corporate sponsor is important. I think the fact that it traded for 15 months with no commercial value was also important. I think that the simplicity of the protocol is very important. I think that the outcome of the block size wars is very important. And all of those things add up to common property. They're all indicators of a digital property as opposed to security. If there was a Satoshi sitting on top of $50 billion worth of Bitcoin, I don't think it would cripple Bitcoin as property, but I think it would undermine its digital property. If I wanted to undermine a crypto asset network, I would do the opposite of all those things. I would launch one myself. I would sell 25% or 50% to the general public. I would keep some of the initial, I would pre-mine some stuff or early mine it, and I would keep an influence on it. Those are all the opposite of what you would do in order to create common property. And so I see the entire story as Satoshi giving a gift of digital property to the human race and disappearing.
Do you think it was one person? Do you have ideas of who it could be?
I don't care to speculate.
But do you think it was one person? Like,
There was one person, maybe in conjunction with a bunch of others. I mean, it might have been a group of people that were working together, but certainly there's a Satoshi.
I mean, it's just so fascinating to me that one person could be so brave and thoughtful. Or do you think a lot of it is accident, like the block size wars, the decision to make a block a certain size? All the things you mentioned led up to the characteristics that make Bitcoin property. Do you think that's an accident, or was it deeply thought through? Like, this is almost like a history of science question.
People tried it they tried 40 of them, right? I mean, I think there's a history of attempting to create something like this, and it was tried many, many times, and they failed for different reasons. And I think that, like, Prometheus tried to start a fire 47 times, and maybe the 48th time it sparked. And that's how I see this. This is the first one that sparked, and it sets a roadmap for us. And I think if you're looking for any one word to characterize, it's fair. Right? The whole point of the network is it's a fair launch, a fair distribution. Like, yeah, I have Bitcoin, but I bought it. In fact, at this point, we've paid $4 billion of real cash to buy it. If I was sitting on the same position and I had it for free, then there's always this question of, did I, or I bought it for a nickel a coin or a penny a coin. The question is, was it fair? And that's a very hard question to answer, right? Did you acquire the Bitcoin that you own fairly? And if you roll the clock back, you could have bought it for a nickel or a dime, but that was when it was a million times more likely to fail. Right? When the risk was greater, the cost was lower, and then over time, the risk became lower and the cost became greater. And the real critical thing was to allow the marketplace, absent any powerful interested actor. Right? It's almost like if Satoshi had held 1 million coins and then stayed engaged for 10 more years, tweaking things in the background, there'd still be that question. But what we've got is really a beautiful thing. We've got a chain reaction in cyberspace, or an ideology spreading virally in the world that has seasoned in a fair, ethical fashion. Sometimes it's a very violent, brutal fashion with all the volatility, right? And there's been a lot of sound and fury along the way.
How do you psychoanalyze? How do you deal from a financial, from a human perspective with the volatility? You mentioned you could have gotten it for a nickel and the risk was great. Where's the risk today? What's your sense?
We're 13 years into this entire activity. I think the risk has never been lower. Right? If you look at all the risks, right? The risks in the early years is the engineering protocol proper? Like 1 megabyte block size, 10-minute clock frequency, cryptography is first, will it be hacked or will it crash? 730,000 blocks and it hasn't crashed. Will it be hacked? Hasn't been hacked. But, it's a Lindy thing, right? You wait 13 years to see if it will be hacked. But on the other hand, with $1 billion, it's not as interesting a target as it is with 100 billion. And when it gets to be worth $1 trillion, then it's a bigger target. So the risk has been bleeding off over time as the network monetized. I think the second question is, will it be banned? You couldn't know. It literally could have been banned at any time, many times early on. In fact, in 2013, I tweeted on the subject. I thought it would be banned. I made a very infamous tweet.
Yeah.
I thought it was going to be banned. In 2014, the IRS designated it as property and gave it property tax treatment. Okay, so they could have given it a tax treatment where you had to pay tax on the unrealized capital gains every year, and it probably would have crushed it to death, right? So it could have been in any number of places banned by a government, but in fact, it was legitimized as property. And then the question is, would it be hacked or would it be copied? Will it be something better than that? And it was copied 15,000 times. And you know the story of all those. And they either diverged to be something totally different and not comparable, or someone trying to copy a non-sovereign bearer instrument store of value found that their networks crashed to be 1% of what Bitcoin is. So now we're sitting at a point where all those risks are out of the way. I would say that year one of institutional adoption is it started August 2020. That's when MicroStrategy bought $250 million worth of Bitcoin, and we put that out on the wire. We were the first publicly traded company to actually buy Bitcoin. I don't think you could have found a $5 million purchase from a public company before we did that. So that was kind of like a gun going off. And then in the next 12 months, Tesla bought Bitcoin, Square bought Bitcoin. And I'd say now we're in year 2 of institutional adoption. And there are about 24 publicly traded Bitcoin miners by the end of this quarter. So you're looking at 36 publicly traded companies, and you've got 50, at least in the range of $50 billion on the balance of Bitcoin on the balance sheet of publicly traded companies, and hundreds of billions of dollars of market cap of Bitcoin exposed companies. So I would say the asset, decade 1 was entrepreneurial, experimental. Decade 2 is a rotation from entrepreneurs to institutions, and it's becoming institutionalized. So maybe decade 1, you go from 0 to $1 trillion, and decade 2, you go from 1 trillion to 100 trillion.
What about governments? Government adoption, you said institutional adoption. Are governments important in this? Maybe making it, some governments incorporating it into as a currency, into their banks, all that kind of stuff. Is that important? And if it is, when will it happen?
It's not essential for the success of the asset class, but I think it's inevitable in various degrees over time. But the most likely thing to happen next is large acquisitions by institutional investors of Bitcoin as a digital gold, where they're just swapping out gold for digital gold and thinking of it like that. And the government entities most likely to be involved with that would be sovereign wealth funds. if you look at all the sovereign wealth funds that are holding big tech stock, equities, the Swiss, the Norwegians, the Middle Easterners, if you can hold big tech, then holding digital gold would be, not far removed from that. That's a non-controversial adoption. I think there are opportunities for governments that are much more profound, right? If a government started to adopt Bitcoin as a treasury reserve asset, that's much bigger than just an asset investment. That's 100x bigger. And you could imagine that's like $1 trillion opportunity. Like any government that wanted to adopt it as a treasury reserve asset would probably generate trillions of dollars, $1 trillion or more of value. And then, the thing that people think about is, well, will oil ever be priced in Bitcoin or any other export commodity? I think there's like $1.8 trillion or more of export commodities in the world, and right now they're all priced in dollars. I think that this is a colorful thing, but it's not really that relevant. Like you could sell all that stuff in dollars. The relevant decision that any institution makes, whether they're a nonprofit, a university, a corporation, or a government, is what's your treasury reserve asset? And if your treasury reserve asset is the peso, and if the peso is losing 20% or 30% of its value a year, then your balance sheet is collapsing within 5 years. And if the treasury reserve asset is dollars and currency derivatives and U.S. treasuries, then you're getting your 7. Right now, it's probably 15% or more monetary inflation. We're running double the historic average. You could argue triple, somewhere between double and triple, depending upon what your metric is. So, do I think it'll happen? I think that they're conservative, but they have to be shocked. And I think there is a shock. The late Russian sanctions are a big shock that when the West sees $300 billion worth of Russian gold and currency derivatives, I think, you got the famous quote by Putin that, we have to rethink our treasury strategies. And that pushes everybody toward a commodity strategy. What commodities do I want to hold? I think that's got a lot of people thinking. I think it's got the Chinese thinking. Everybody wants to reserve currency, right? So if I buy $50 billion worth of dollars every year, then I buy $500 billion over a decade, and I probably pay $250 billion of inflation cost on the backs of my citizens in a decade. So
inflation could be one of the sources of shock. And you wonder if there is a switch to Bitcoin, whether it will be a bang or a whimper, like what is the nature of the shock, the transition?
I think that the year 2022 is pretty catalytic for digital assets in general and for Bitcoin in particular. The Canadian trucker crisis, I think, educated hundreds of millions of people and made them start questioning their property rights and their banks. I think the Ukraine war was a second shock, but I think that the Russian sanctions was a third shock.
Yeah,
I think all three of them, and I think hyperinflation in the rest of the world is a fourth shock, and then persistent inflation in the U.S. is a fifth shock. So I think it's a perfect storm. And if you put all these events together, what do they signify? They signify the rational conclusion for any person thinking about this is, I'm not sure if I can trust my property. I don't know if I have property rights. I don't know if I can trust the bank. And if I'm politically at odds with the leader of my own country, I'm going to lose my property. And if I'm politically at odds with the owner of another country, I'm still going to lose my property. And when push comes to shove, the banks will freeze my assets and seize them. And I think that is playing out in front of everybody in the world, such that your logical response would be, I'm going to convert my weak currency to a strong currency. Like I'll convert my peso and lira to the dollar. I'm going to convert my weak property to strong property. I'm going to sell my building downtown Moscow, and I'd rather own a building in New York City. I'd rather own in a powerful nation than be stuck with a building in Nigeria or a building in Argentina or whatever. So I'm going to sell my weak properties by strong properties. I'm going to convert my physical assets to digital assets. I'd rather own a digital building than own a physical building. Because if I had $1 billion building in Moscow, who can I rent that to? But if I have $1 billion digital building, I can rent it to anybody in any city in the world. Anybody with money. And the maintenance cost is almost nothing. And I can hold it for 100 years. So it's an indestructible building. And then finally, I want to move from having my assets in a bank with a counterparty to self-custody assets. Right? So, and this is not, it's not just Ukraine, but this is like the story in Turkey, Lebanon, Syria, Afghanistan, Iraq, South America. You don't really want to be sitting with $10 million in a bank in Istanbul. The bank's going to freeze your money, convert it to lira, devalue the lira, and then feed it back to you over 17 years, right?
So self-custody assets would be layer one Bitcoin.
Self-custody assets, it's like if I got my own hardware wallet and I've either got your highest form of self-custody would be Bitcoin on your own hardware wallet or Bitcoin in your own self-custody. And the other thing people think about is, how do I get crypto dollars like Tether, like some stable coin?
Yeah.
Like I'd rather, if you had a choice, would you rather have your money in a bank in a war zone in dollars or have your money in a stable coin on your mobile phone in dollars? Right? I mean, you take the latter risk rather than the former risk.
In a war zone, definitely, yeah.
And you can see that happening. Like we've gone from 5 billion in stable coins to 200 billion in the last 24 months. So I do think there's massive demand for crypto dollars in the form of a US dollar asset. And everybody in the world would say, yeah, I want that. Well, unless you're just an extreme patriot. But most people in the world would say, I want that. And then a lesser group of people would say, I think I want to be able to carry my property in the palm of my hand, so I have self-custody of it.
So Bitcoin price has gone through quite a roller coaster. What do you think is the high point it's going to hit?
I think it'll go up forever. Right? I mean, I think that Bitcoin is going to climb in a serpentine fashion. It's going to advance and come back, and it's going to keep climbing. I think that the volatility attracts all the capital into the marketplace. And so the volatility makes it the most interesting thing in the financial universe. It also generates massive yield and massive returns for traders. And that attracts capital. Like we're talking about the difference between 5% return and 500% return. Mm-hmm. So the fast money is attracted by the volatility. The volatility has been decreasing year by year by year. I think that it's stabilizing. I don't think we'll see as much volatility in the future as we have in the past. I think that if we look at Bitcoin and model it as digital gold, the market cap goes to between 10 and 20 trillion. But gold is defective property. Gold is dead money. You have $1 billion of gold that sits in a vault for a decade. It's very hard to mortgage the gold. It's also very hard to rent the gold. You can't loan the gold. No one's going to create a business with your gold. So gold doesn't generate much of a yield. So for that reason, most people wouldn't store $1 billion for a decade in gold. They would buy $1 billion of commercial real estate property. And the reason why is because I can rent it and generate a yield on it that's in excess of the maintenance cost. So if you consider digital property, that's $100 to $200 trillion addressable market. So I would think it goes from 10 trillion to 100 trillion if people start to think of it as digital property.
What does that mean in terms of price per coin?
At 500,000, right? That's a $10 trillion asset.
Actually.
At 5 million, that's a $100 trillion asset.
So you think it crosses 1 million, it can go even higher?
Yeah, I think it keeps going up forever. I mean, there's a reason we can go to 10 million coin, right? Because digital property isn't the highest form, right? Gold was that low frequency money. Property is a mid frequency money. But when I start to program it faster, it starts to look like digital energy, and then it doesn't just replace property. Then you're starting to replace bonds. It's 100 trillion in bonds. There's 50 to 100 trillion in other currency derivatives, and these are all conventional use cases, right? I think that there's 350 trillion to 500 trillion dollars worth of currency derivatives in the world, mm-hmm. and when I say that, I mean things that are valued based upon fiat cash flows. Any commercial real estate, any bond, any sovereign debt, any currency itself, any derivatives to those things, they're all derivatives, and they're all defective. And they're all defective because of this persistent 7 to 14% lapse, which we call inflation or monetary expansion. Can we switch? So I'm just going to talk about the energy side of it, like sure. the innovative piece.
Yeah.
Let's just start with this idea that I've got a hotel with $1 billion with 1,000 rooms. Mm-hmm. When it becomes a dematerialized hotel.
I love that word so much, by the way, dematerialized hotel.
We're across from the Fontainebleau here. Imagine the Fontainebleau is dematerialized. Yeah. The problem with a physical hotel is I got to hire real people moving subject to the speed of sound and physics laws and Newton's laws, and I can rent it to people in Miami Beach. Mm-hmm. But if it was a digital hotel, I could rent the room to people in Paris, London, and New York every night, and I can run it with robots. And as soon as I do that, I can rent it by the room hour, and I can rent it by the room minute. And so I start to chop my hotel up into 100,000 room hours that I sell to the highest bidder anywhere in the world. And you can see all of a sudden the yield, the rent, and the income of the property is dramatically increased. I can also see the maintenance cost of the property falls. I get on Moore's law, and I'm operating in cyberspace. So I got rid of Newton's laws. I got rid of all the friction and all those problems. I tapped into the benefits of cyberspace. I created a global property. I started monetizing at different frequencies. And of course, now I can mortgage it to anybody in the world, right? I mean, you're not going to be able to get a mortgage on a Turkish building from someone, in South Africa. You have to find someone that's local to the culture you're in. So when you start to move from analog property to digital property, it's not just a little bit better, it's a lot better. And what I just described, Lex, is like the DeFi vision, right? It's the beauty of DeFi, flash loans, money moving at high velocity. At some point, if the hotel is dematerialized, then what's the difference between renting a hotel room and loaning a block of stock, right? I'm just finding the highest, best use of the thing.
It feels like the magic really emerges, though, when you build a market of layer 2 and layer 3 technologies on top of that. It's like, maybe you can correct me if I'm wrong, but for all these hotels and all these kinds of ideas, it's always touching humans at some point. And the consumers or humans, business owners, and so on. So you have to create interface, you have to create services that make all that super efficient, super fun to use, pleasant, effective, all those kinds of things. So you have to build a whole economy on top of that.
Yeah, and I happen to think that won't be done by the crypto industry at all. I think that'll be done by centralized applications. I think it'll be, the Citadels of the world, the high-speed traders of the world, the New Yorkers. I think it'll be Binance, FTX, and Coinbase as a layer 3 exchange that will give you the yield and will give you the loan. and the best terms. Because ultimately, you have to jump these compliance hoops. It comes like BlockFi can give you yield, but they have to do it in a compliant way with the United States jurisdiction. So ultimately, those applications to use that digital property and either generate a loan, give you a loan on it, or give you yield on it, are going to come from companies. But the fundamental difference is, it could be companies anywhere in the world. So if a company in Singapore comes up with a better offering, right, then the capital is going to start to flow to Singapore. I can't send 10 city blocks of LA to Singapore to rent during a festival, but I can send 10 blocks of Bitcoin to Singapore. So you've got a truly global market that's functioning in this asset, and it's a second order asset. For example, maybe you're an American citizen and you own 10 Bitcoin, and someone in Singapore will generate 27% yield in the Bitcoin, but legally you can't send the money to them or the Bitcoin to them. It doesn't matter, because the fact that that exists means that someone in Hong Kong will borrow the 10 Bitcoin from somebody in New York, and then they will put on the trade in Singapore, and that will create a demand for Bitcoin, which will drive up the price of Bitcoin, which will result in an effective tax-free yield for the person in the US that's not even in the jurisdiction. So there's nothing that's going on in Singapore to drive up the price of your land in LA. But there is something going on everywhere in the world to drive up the price of property in cyberspace if there's only one digital Manhattan. And so there's a dynamic there which is profound because it's global. But now let's go to the next extreme. I'm still giving you a fairly conventional idea, which is, let's just loan the money fast on a global network, and let's just rent the hotel room fast in cyberspace. But now, let's move to maybe a more innovative idea. The first generation of internet, brought a lot of productivity, but there's also just a lot of flaws in it. For example, Twitter is full of garbage. Instagram DMs are full of garbage. Your Twitter DMs are full of garbage. YouTube is full of scams. Every 15 minutes, there's a Michael Saylor Bitcoin giveaway spun up on YouTube. Yeah. My Office 365 inbox is full of garbage. Millions of spam messages. I'm running 4 different email filters. My company spends $1 million a year to fight denial of service attacks and all sorts of other security things. There are denial of service attacks everywhere against everybody in cyberspace all the time. It's extreme. And we're all beset with hostility, right? You've been a victim of it in Twitter. You go on Twitter and people post stuff they would never say to your face. And then if you look, you find out that the account was created like 3 days ago and it's not even a real person. So, we're beset with phishing attacks and scams and spam bots and garbage. And why? And the answer is because the first generation of internet was digital information, and there's no energy. There's no conservation of energy in cyberspace. The thing that makes the universe work is conservation of energy. Like, if I went to a hotel room, I'd have to post a credit card, and then if I smashed the place up, there'd be economic consequences, maybe there'd be criminal consequences, there might be reputational consequences, Lamp might fall on me, but in the worst case, I can only smash up one hotel room. Now imagine I could actually write a Python script to send myself to every hotel room in the world every minute, not post a credit card, and smash them all up, anonymously. The thing that makes the universe work is friction, speed of sound, speed of light, and the fact that it's ultimately conservative. You're either energy or you're matter, but once you've used the energy, it's gone, and you can't do infinite everything. That's missing in cyberspace right now. And if you look at all of the moral hazards and all of the product defects that we have in all of these products, most of them, 99% of them, could be cured if we introduced conservation of energy into cyberspace. And that's what you can do with high-speed digital property, high-speed Bitcoin. And by high-speed, I mean not 20 transactions a day, I mean 20,000 transactions a day. So how do you do that? Well, I let everybody on Twitter post 1,000 or 10,000 Satoshis via a Lightning wallet, a Lightning badge. Give me an orange check. If you put up $20 once in your life, you could give 300 million people an orange check. Right now, you don't have a blue check, Lex. You're a famous person. I don't know why you don't have a blue check. Have you ever applied for a blue check?
No.
There are 360,000 people on Twitter with a blue check. There are 300 million people on Twitter. Mm-hmm. So the conventional way to verify accounts is elitist, archaic.
Yeah, how does it work? How do you get a blue check? I mean,
you got to apply and wait 6 months, and you have to post, like 3 articles in the public mainstream media that illustrates you're a person of interest.
Interesting.
Generally, they would grant them to CEOs of public companies, or the whole idea is to verify that that you are
who you are,
who you say you are.
Right.
But the question is, why isn't everybody verified?
Right.
And there's a couple of threads on that. One is some people don't want to be doxxed; they want to be anonymous. But there are even anonymous people that should be verified.
Right.
Because otherwise, you're subjecting their entire following to phishing attacks and scams and hostility. But the other
what's the orange verification? So this idea, can you actually elaborate a little bit more? If you put up $20,
yeah, I think everybody on Twitter ought to be able to get an orange check if they could come up with like $10.
And what is the power of that orange check? What does that verify exactly?
You basically post a security deposit for your safe passage through cyberspace. So the way it would work is if you've got $10 once in your life, you can basically show that you're creditworthy, and that's your pledge to me that you're going to act responsibly. So you put the $10 or the $20 into the Lightning wallet, you get an orange check. then Twitter just gives you a setting where I can say the only people who can DM me are orange checks. The only people who can post on my tweets are orange checks. So instead of locking out the public and just letting your followers, comment, you lock out all the unverified, and that means people that don't want to post $10 security deposit can't comment. Once you've done those two things, then you're in a position to monetize malice, right? Monetize motion or malice for that matter. But let's just say, for the sake of argument, you post something and 9,700 bots spin up, and pitch their whatever scam. Right now, you sit and you go report, and if you spend an hour, you get through half of them. You waste an hour of your life. They just spin up another 97 gazillion because they got a Python script spinning it up, so it's hopeless. But on the other hand, if you report them and they really are a bot, Twitter's got a method to actually delete the account. They know that they're bots. The problem is not they don't know how to delete the account. The problem is there are no consequences when they delete the account. So if there are consequences, Twitter could they could just seize the $10 or seize the $20 because it's a bot. It's a malicious criminal act or whatever. It is a violation of the platform rules. You end up seizing $10,000, give half the money to the reporter and half the money to the Twitter platform. And
it's a really powerful idea, but that's tying it, that's adding friction akin to the kind of friction you have in the physical world. You have consequences, you have real consequences.
Putting conservation of energy.
Conservation of energy.
There's no friction, there's no nothing on this earth, right? I mean, you can't walk across the room without friction, right? So friction is not bad, right? Unnecessary friction is bad. So in this particular case, you're introducing conservation of energy, and in essence, you're introducing the concept of consequence or truth into cyberspace. And that means if you do want to spin up 10 million fake Lex Fridmans, right? It's going to cost you $100 million to spin up 10 million fake Lexes.
But the thing is, you could do that with the dollar. But in your case, you're saying that it's more tied to physical reality when you do that with Bitcoin.
Yeah, well, let's follow up on that idea a bit more. If you did do it with the dollar, then the question is, how do 6 billion people deposit the dollars? Right? Because what you're doing is, could you do it with a credit card? Like, how do you send dollars? Well, you have to dox yourself. It's not easy. So you're talking about inputting a credit card transaction, doxing yourself, and now you've just eliminated the 2 billion people that don't have credit cards or don't have banks. You've also got a problem with everybody that wants to remain anonymous. But you've also got this other problem, which is credit cards are expensive transactions, low frequency, slow settlement. So do you really want to pay 2.5% every time you actually show a $20 deposit? And maybe you could do a kludgy version of this for a subset of people. It's like it's 10% is good if you did it with conventional payment rails. But what you can't do is the next idea, which is I want the orange badge to be used to give me safe passage through cyberspace, tripping across every platform. So how do I solve the denial of service attacks against a website? I publish a website, you hit it with 1 million requests. Okay, now how do I deal with that? Well, I can lock you out and I can make it a zero trust website, and then you have to be coming at me through a trusted firewall with a trusted credential, but that's a pretty draconian thing. Or I could put it behind a lightning wall. A lightning wall would be, I just challenge you, Lex. You want to browse my website, you have to show me your 100,000 Satoshis. Do you have 100,000 Satoshis? Click. Okay, now you click away 100 times or 1,000 times, and after 1,000 times, well, now, Lex, you're getting offensive. I'm going to take a Satoshi from you, or 10 Satoshis, a microtransaction. You want to hit me 1 million times? I'm taking all your Satoshis and locking you out. What you want to do is you want to go through 200 websites a day, and what you want every time you cross a domain, you need to be able to, in a split second, prove that you've got some asset. And now when you cross back, when you exit domain, you want to fetch your asset back. So how do I, in a friction-free fashion, browse through dozens or hundreds of websites, post a security deposit for safe passage, and then get it back? You couldn't afford to pay a credit card fee each time. When you think about 2.5% as a transaction fee, it means you trade the money 40 times, and it's gone.
Yeah.
It's gone.
Yeah. So you can't do this kind of hopping around through the internet with this kind of verification that grounds you to physical reality. It's a really, really interesting idea. Why hasn't that been done?
I think you need two things. You need an idea like a digital asset like Bitcoin. It's a bearer instrument for final settlement. And then you need a high-speed transaction network like Lightning, where the transaction cost might be a 20th of a penny or less. And if you roll the clock back 24 months, I don't think you had the Lightning network in a stable point. It's really just the past 12 months. It's an idea you could think about this year. And I think you need to be aware of Bitcoin as something other than like a scary speculative asset. So I really think we're just the beginning.
The embryonic stage. I have to ask, Michael, you said before, there's no second best to Bitcoin. What would be the second best? Traditionally, there's Ethereum with smart contracts, Cardano with proof of stake, Polkadot with interoperability between blockchains. Dogecoin has the incredible power of the meme. Privacy with Monero. I just can keep going. There's of course, after the block size wars, the different offshoots of Bitcoin.
I think if you decompose or segment the crypto market, you've got crypto property. Bitcoin is the king of that. Another Bitcoin fork's the one to be a bearer instrument, store of value. like would be a property, Bitcoin Cash or Litecoin, something like that. Then you've got cryptocurrencies. I don't think Bitcoin's a currency because a currency I define in nation state sense. A currency is a digital asset that you can transfer as in a transaction without incurring a taxable obligation. So that means it has to be a stable dollar or a stable euro or a stable coin. So I think about cryptocurrencies, Tether, Circle, most famous. Then I think about crypto platforms, and Ethereum is the most famous of the crypto platforms, the platform upon which, with smart contract functionality, et cetera. And then I think about just crypto securities. It's just like my favorite whatever meme coin, and I love it because I love it, and it's attached to my game or my company or my persona or my whatever. I think if you pushed me and said, well, what's the second best? I would say the world wants two things. It wants crypto property as a savings account, and it wants cryptocurrency as a checking account. And that means that the most popular thing really is going to be a stablecoin dollar, right? And there's maybe a fight right now. It might be Tether, right? But a stable dollar, because I feel like the market opportunity, it's not clear that there'll be one that will win. The class of stable dollars is probably a $1 to $10 trillion market easily. I think that in the crypto platform space, Ethereum will compete with Solana and Binance Smart Chain and the like.
Are there certain characteristics of any of them that kind of stand out to you? Or don't you think the competition is based on a set of features? Also, so the set of features that a cryptocurrency provides, but also the community that it provides. Don't you think the community matters? Sort of the adoption, the dynamic of the adoption, both across the developers and the investors?
If I'm looking at them, the first question is what's the regulatory risk? How likely is it to be deemed a property versus security? And the second is what's the competitive risk? And the third is what's the speed and the performance? And all those things, lead to the question of what's the security risk? How likely is it to crash and burn? And how stable or unstable is it? And then there's the marketing risk. There are different teams behind each of these things and communities behind them. I think that the big cloud looming over the crypto industry is regulatory treatment of cryptocurrencies and regulatory treatment of crypto securities and crypto platforms. And I think that won't be determined until the end of the first Biden administration. For example, there are people that would like only U.S. FDIC insured banks to issue cryptocurrencies. They want JP Morgan to issue a crypto dollar backed 1-to-1. But then in the U.S. right now, we have Circle and we have other companies that are licensed entities that are backed by cash and cash equivalents, but they're not FDIC insured banks. There's also a debate in Congress about whether state chartered banks should be able to issue these things. And then we have Tether and others that are outside of the U.S. jurisdiction. They're probably not backed by cash and cash equivalents. They're backed by stuff, and we don't know what stuff. And then finally, you have UST and DAI, which are algorithmic stablecoins, right? That are even more innovative, further outside the compliance framework. So if you ask who's going to win, the question is really, I don't know, will the market decide or will the regulators decide? If the regulators get out of the way and the market, well, then it's an interesting discussion.
Yeah.
And then I think that all bets are off if the regulators get more heavy-handed with this. I think you could have the same discussion with crypto properties, like the DeFi exchanges and the crypto exchanges. The SEC would like to regulate the crypto exchanges. They'd like to regulate the DeFi exchanges. That means they may regulate crypto platforms and at what rate and in what fashion. And so I think that I could give you an opinion if it was limited to competition under the current regulatory regime. But I think that the regulations are so fast moving and it's so uncertain that you can't make a decision without considering the potential actions of the regulators.
I hope the regulators get out of the way. Can you steel me on the case that Dogecoin is, I guess, the second best cryptocurrency, or if you don't consider Bitcoin a cryptocurrency, but instead a crypto property?
I would classify it as crypto property because the U.S. dollar is a currency. So unless your crypto asset is pegged algorithmically or stably to the value of the dollar, it's not a currency. It's a property or it's an asset.
So then, can you steel me on the case that Dogecoin is the best cryptocurrency then? Because Bitcoin is not even in that list.
The debate is going to be whether it's property or security, and there's a debate whether it's decentralized enough. So let's assume it was decentralized.
Yeah.
Well, it's increasing at not quite 5% a year inflation rate, but it's not 5% exponentially. It's like a plus 5 million, 5% something. Captain is less. I forget the exact number, but it's an inflationary property. It's got a lower inflation rate than the U.S. dollar, and it's got a much lower inflation rate than many other fiat currencies. So I think you could say that.
But don't you see the power of meme, the power of ideas, the power of fun or whatever mechanism is used to captivate a community?
I do, but there are meme stocks. It doesn't absolve you of your ethical and securities liabilities if you're promoting it. So I don't have a problem with people buying a stock. It's just the way I divide the world is, right, there's investment, there's saving, and there's speculation, and there's trading. So Bitcoin is an asset for saving. If you want to save money for 100 years, you don't really want to take on execution risk or the like. So you're just buying something to hold forever. For you to actually endorse something as a property, like if you said to me, Mike, what should I buy for the next 100 years? I say, well, some amount of real estate, some amount of scarce collectibles, some amount of Bitcoin, right? You can run your company, right? But running your company is an investment. So the savings are properties. If you said, what should I invest in? I'd say, well, here's a list of good companies, private companies. You can start your own company. That's an investment. right? If you said, what should I trade? Well, trading is like a proprietary thing. Like I don't have any special insight into that. If you're a good trader, you know you are. If you said to me, what should you speculate in? We talk about meme stocks and meme coins, and it kind of sits up there. It sits right in the same space with what horse should you bet on and what sports team should you gamble on, and should you bet on black 6 times in a row and double down each time. It's fun, but at the end of the day, it's a speculation, right? You can't build a civilization
On speculation.
on it. It's not an institutional asset. And in fact, where I'd leave it, right, is Bitcoin is clearly digital product, which makes it an institutional grade investable asset for a public company, a public figure, a public investor, or anybody that's risk adverse.
Mm-hmm.
I think that the top 100 other cryptos are like venture capital investments. And if you're a VC and if you're a qualified technical investor and you have a pool of capital and you can take that kind of risk, then you can parse through that and form opinions. It's just orders of magnitude more risky because of competition, because of ambition, and because of regulation. And if you take the meme coins, it's like, when some rapper comes out with a meme coin, it's like, maybe it'll peak when I hear about it, right? It's like, SHIB was created as a coin such that it had so many zeros after the decimal point that when you looked at it on the exchanges, it always showed 0, 0, 0, 0. Mm-hmm. And it wasn't until like 6 months after it got popular that they started expanding the display so you could see whether the price had changed.
That's speculation. You've been, maybe you can correct me, but you've been critical of Elon Musk in the past in the crypto space. Where do you stand on Elon's effect on Bitcoin and cryptocurrency in general these days?
I believe that Bitcoin is a massive breakthrough for the human race that will cure half the problems in the world and generate hundreds of trillions of dollars of economic value to the civilization. And I believe that it's in an early stage where many people don't understand it and they're afraid of it, and there's FUD, and there's uncertainty, there's doubt, there's fear, and it's a very noisy crypto world, and there's 15,000 other cryptos that are seeking relevance. And I think most of the FUD is actually fueled by the other crypto entrepreneurs. So the environmental FUD and the other types of uncertainty that surround Bitcoin, generally, they're not coming from legitimate environmentalists. They don't come from legitimate critics. They actually are guerrilla marketing campaigns that are being financed and fueled by other crypto entrepreneurs because they have an interest in doing so. So if I look at a constructive path forward, first, I think it'd be very constructive for corporations to embrace Bitcoin and build applications on top of it. You don't need to fix it. There's nothing wrong with it, right? Like when you put it on a layer 2 and a layer 3, it moves 1 billion times a second at the speed of light. So every beautiful, cool DeFi application, every crypto application, everything you can imagine you might want to do, you can do with a legitimate company and a legitimate website or mobile application sitting on top of Bitcoin or Lightning if you want to. So I think that to the extent that people do that, that's going to be better for the world. If you consider what holds people back, I think it's just misperceptions about what Bitcoin is. So I'm a big fan of just educating people. If you're not going to commercialize it, then just educate people on what it is. So for example, Bitcoin's the most efficient use of energy in the world by far. Right? Most people don't necessarily perceive that or realize that. But if you were to take any metric, energy intensity, you put like $2 billion worth of electricity in the network every year, and it's worth $850 billion. There is no industry in the real world, right, that is that energy efficient. Not only that energy efficient, it's also the most sustainable industry. We do surveys. 58% of Bitcoin mining energy is sustainable. So there's a very good story. In fact, every other industry, planes, trains, automobiles, construction, food, medicine, everything else, less clean, less efficient. So
the basic debate
I wouldn't say there is a debate. I would just say that to the extent that the Bitcoin community had any issue with Elon, it was just this environmental uncertainty that he fueled in a couple of his tweets, right? Which I think just is very distracting.
Well, that was one of them, but I think it's like the Bitcoin maximalists, but generally the crypto community, what you call the crypto entrepreneurs, are, it's also, they're using it for investment, for speculation, and therefore get very passionate about people's kind of celebrities, including you, like famous people, right, saying positive stuff about any one particular crypto thing you can buy in Coinbase. And so they might be unhappy with Elon Musk that he's promoting Bitcoin and then not, and then promoting Dogecoin and then not. And this kind of, there's so much emotion tied up in the communication on this topic. And I think that's where a lot of I don't
have a criticism of Elon Musk. He's free to do whatever he wishes to do. So it's like, in fact, Elon Musk is the second largest supporter of Bitcoin in the world. So I think that the Bitcoin community tends to eat its own quite a bit.
Yeah.
Like, it tends to be very, very self-critical. And instead of saying, well, Elon is more supportive of Bitcoin than the other 10,000 people in the world, with serious amounts of money, they focus upon, Yeah, this is strange. Eating your own is just. So I think he's free to do what he wants to do. And I think he's done a lot of good for Bitcoin in putting it on the balance sheet of Tesla and holding it. And I think that sent a very powerful message.
Do you have advice for young people? So you've had a heck of a life. You've done quite a lot of things. Start before MIT, but starting with MIT. Is there advice here for young people in high school and college? How to have a career they can be proud of, how to have a life they can be proud of?
I was asked by somebody for quick advice for his young children. He had twins when they enter adulthood. He said, give me your advice for them in a letter. I'm going to give it to them when they turn 21 or something. Mm-hmm. So then I thought I was at a party, and then he handed me the sheet of paper. I thought, oh, he wants me to write it down right now. So I sat down, I started writing, and I figured, well, what would you want to tell someone at age 21?
You wrote it down.
So I wrote it down.
Awesome.
And I tweeted it, and it's sitting on Twitter, but I tell you what I said. I said, my advice if you're entering adulthood: focus your energy, guard your time, train your mind, train your body, think for yourself, curate your friends, curate your environment, keep your promises, stay cheerful and constructive, and upgrade the world. Like, that was the 10.
Upgrade the world. That's an interesting choice of words. Upgrade the world. Upgrade the world.
It's like an engineer's
Focus your energy. It's a very engineering themed. Keep your promises too. That's an interesting one.
I think most people suffer because they don't focus. You got to figure out. I think the big risk in this world is there's too much of everything.
Yeah.
Like, you can sit and watch chess videos 100 hours a week, and you'll never get through all the chess videos. Right? There's too much of every possible thing, too much of every good thing. So figuring out what you want to do, and then everything will suck up your time, right? There's 100 streaming channels to binge watch on. So you got to guard your time, and then train your body, train your mind, and control who's around you, control what surrounds you. So ultimately, in a world where there's too much of everything, then you're
it's like
successful.
those laser eyes. It's like those laser eyes. You have to focus on just a few of those things.
Yeah, I mean, I got 1,000 opinions we could talk about, and I could pursue 1,000 things, but I don't expect to be successful. And I'm not sure that my opinion in any of the 999 is any more valid than the leader of thought in that area. So how about if I just focus upon one thing, and then deliver the best I can in the one thing? That's the laser eye message. The rest get you distracted.
Well, how do you achieve that? Do you find yourself, even where you are in life, having to say no a lot? Or just focus comes naturally when you just ignore everything around you? So how do you achieve that focus?
I think it helps if people know what you're focused on.
So everything about you just radiates that. People know this.
If they know what you're focused on, then you won't get so many other things coming your way. If you dally, or if you flirt with 27 different things, then you're going to get approached by people in each of the 27 communities, right?
You mentioned getting a PhD and giving your roots at MIT. Do you think there's all kinds of journeys you can take to educate yourself? Do you think a PhD or school is still worth it? Or is there other paths through life that...
Is it worth it if you have to pay for it? Is it worth it if you have to spend the time on it?
The time and the money is a big cost.
I think...
time probably the bigger one, right?
It seems clear to me that the world wants more specialists. It wants you to be an expert and to focus in one area. And it's punishing generalist, jack of all trades, especially people that are generalists in the physical realm. Because if you're a specialist in the digital realm, you might very well... You're the person with 700,000 followers on Twitter, and you show them how to tie knots, or you're the banjo player, with 1.8 million followers, and when everybody types banjo, it's you, right? Yeah. And so the world wants people that do something well, and then it wants to stamp out 18 million copies of them, and so that argues in favor of focus. Now, I mean, the definition of a PhD is someone with enough of an education that they're capable of or have made. I guess to get a PhD, technically, you have to have done a dissertation where you made a seminal contribution to the body of human knowledge. Right? And if you haven't done that, technically, you have a master's degree, but you're not a doctor. So if you're interested in any of the academic disciplines that a PhD would be granted for, then I can see that being a reasonable pursuit. But there are many people that are specialists. The Aggimator?
Yeah.
The Aggimator on YouTube?
Yeah.
He's the world's greatest chess commentator.
Yeah.
And I've watched his career, and he's got progressively better, and he's really good.
He's going to love hearing this.
If the Aggimator ever hears this, I'm a big fan of the Aggimator. I have cut myself off, right? Because otherwise you'll watch the entire Paul Morphy saga for a weekend. But the point really is YouTube is full of experts who are specialists in something, and they rise to the top of their profession. And Twitter is too, and the internet is. So I would advocate that you figure out what you're passionate about and what you're good at, and you do focus on it, especially if the thing that you're doing can be automated. The problem is, back to that 500,000 algebra teacher type comment, the problem is if it is possible to be automated, then over time, someone's probably going to automate it, and that squeezes, the state space of everybody else. It's like after the lockdowns, It used to be there were like all these local bands that played in bars, and everybody went to the bar to see the local band. And then during the lockdown, you would have like these 6 super groups, and they would all get 500,000 or 1 million followers, and all these smaller local bands just got no attention at all.
Well, the interesting thing is one of those 500,000 algebra teachers is likely to be part of the automation. So it's an opportunity for you to think, where's my field, my discipline evolving into? I talked to a bunch of librarians, just happen to be friends with librarians, and libraries will probably be evolving, and it's up to you as a librarian to be one of the few that remain in the rubble.
If you're going to give commentary on Shakespeare plays, I want you to basically do it for every Shakespeare. Like I want you to be the Shakespeare dude, because once just like Lex, you're like,
I don't know what kind of
you're the deep thinking podcaster, right? Or you're the podcaster that goes after the deep intellectual conversations. And once I get comfortable with you and I like you, then I start binge watching Lex.
Yeah.
But if you changed your format
Yeah.
through 16 different formats so that you could compete with 16 different other personalities on YouTube, you probably wouldn't beat any of them, right? You would probably just kind of sink into you're the number 2 or number 3 guy. You're not the number 1 guy in the format. And I think the algorithm, right? The Twitter algorithm and the YouTube algorithm, they really reward the person that's focused on message, consistent. The world wants somebody they can trust, that's consistent and reliable, and they kind of want to know what they're getting into, because this is taken for granted maybe, but there's 10 million people vying for every hour of your time. And so the fact that anybody gives you any time at all is a huge privilege, right? And you should be thanking them, and you should respect their time.
It's interesting. Like everything you said is very interesting. But of course, from my perspective, and probably from your perspective, my actual life has nothing to do with. It's just being focused on stuff. And in my case, it's like focus on doing the thing I really enjoy doing, and being myself, and not caring about anything else. Like I don't care about views or likes or attention. And that just maintaining that focus is the way, from an individual perspective, you live that life. But yeah, it does seem that the world and technology is rewarding the specialization and creating bigger and bigger platforms for the different specializations. And then that lifts all boats, actually, because the specializations get better and better and better at teaching people to do specific things, and they educate themselves, and everybody gets more and more knowledgeable and more empowered.
The reward for authenticity more than offsets the specificity with which you pursue your mission. It's like another way to say it is like nobody wants to read advertising. Like if you were to spend $100 million advertising your thing, I probably wouldn't want to watch it.
Yeah.
But
That's so fascinating.
We see the death of that. Yeah. And so that the commercial shows are losing their audiences, and the authentic specialist or the authentic artist are gaining their audience.
That's a beautiful thing. Speaking of deep thinking, you're just a human. Your life ends. You've accumulated so much wisdom, so much money, but the ride ends. Do you think about that? Do you ponder your death, your mortality? Are you afraid of it?
When I go, all my assets will flow into a foundation, and the foundation's mission is to make education free for everybody forever. And if I'm able to contribute to the creation of a more perfect monetary system, then maybe that foundation will go on forever.
The idea, the foundation of the idea. So not just each of the foundations.
It's not clear we're on the S-curve of immortal life yet. Like that's a biological question, and you ask that, on some of your other interviews a lot. I think that we are on the threshold of immortal life for ideas, or immortal life for certain institutions or computer programs. So if we can fix the money, then you can create a technically perfected endowment. And then the question really is, what are your ideas? What do you want to leave behind? And so if it's a park, then you endow the park, right? If it's free education, you endow that. If it's some other ethical idea, right?
Does it make you sad that there's something that you've endowed, some very powerful idea of digital energy that you put out, you help put into the world, and your mind, your conscious mind, will no longer be there to experience it. It's just gone forever. I'd
rather think that the thing that Satoshi taught us is you should do your part during some phase of the journey, and then you get out of the way. And I think Steve Jobs said something similar to that effect in a very, very famous speech one day, which is, death is a natural part of life, and it makes way for the next generation. And I think the goal is you upgrade the world, right? You leave it a better place, but you get out of the way. And I think when that breaks down, bad things happen. I think nature cleanses itself. There's a cycle of life.
And speaking one of great people who did also get out of the way is George Washington. So hopefully when you get out of the way, nobody's bleeding you to death in hope of helping you. What do you think, to do a bit of a callback, what do you think is the meaning of this whole thing? What's the meaning of life? Why are we here? We talked about the rise of human civilization. It seems like we're engineers at heart. We build cool stuff. Better and better use of energy, channeling energy to be productive. Why? What's it all for?
You're getting metaphysical on me.
There's a beautiful boat to the left of us. Like, why do we do that? This boat that sailed the ocean. Then we build models of it to celebrate great engineering of the past.
To engineer is divine. You can make lots of arguments as to why we're here. We're either here to entertain ourselves, or we're here to create something that's beautiful or something that's functional. I think if you're an engineer, you entertain yourself by creating something that's both beautiful and functional. So I think all three of those things. It's entertaining, but it's ethical. You got to admire, the first person that built a bridge crossing a chasm, or the first person to work out the problem of how to get running water to a village, or the first person that figured out how to, dam up a river, or mastered agriculture, or the guy that figured out, how to grow fruit on trees or created orchards, and maybe one day he had like 10 fruit trees. He's pretty proud of himself.
So that's functional. There is also something to that, just like you said, that's just beautiful. It does get you closer to, like you said, the divine. Something, when you step back and look at the entirety of it, a collective of humans using a beautiful invention or creation, or just something about this instrument is creating a beautiful piece of music. That seems just right. That's what we're here for. Whatever the divine is, it seems like we're here for that. And I, of course, love talking to you because from the engineering perspective, the functional is ultimately the mechanism towards the beauty.
Isn't there something beautiful about making the world a better place for people that you love, your friends, your family, or yourself? And when you think about the entire arc of human existence, and you roll the clock back 500,000 years, and you think about every struggle of everyone that came before us and everything they had to overcome in order to put you here right now, you got to admire that, right? You got to respect that.
That's a heck of a gift they gave us, but it's also a heck of a responsibility. Don't screw it up.
If I dropped you 500,000 years ago and I said, figure out steel refining, or figure out silicon chips, fabric production, or whatever it is.
Fly or
like,
fire.
And so now we're here, and I guess the way you repay them is you fix everything in front of your face you can, right? And that means to someone like Elon, it means get us off the planet, right? To someone like me, it's like, I think, fix the energy in the system.
And that gives me hope. Michael, this was an incredible conversation. You're an incredible human. It's a huge honor you would sit down with me. Thank you so much for talking today.
Yeah, thanks for having me, Lex.
Thanks for listening to this conversation with Michael Saylor. To support this podcast, please check out our sponsors in the description. And now, let me leave you with a few words from Francis Bacon. Money is a great servant, but a bad master. Thank you for listening, and hope to see you next time. The following is a conversation with Rick Rubin, one of the greatest music producers of all time, known for bringing the best out of anyone he works with, no matter the genre of music or even the medium of art, or just the medium of creating something beautiful in this world. And the list of musicians he produced includes many, many, many of the greats over the past 40 years, including Beastie Boys, Eminem, Metallica, LL Cool J, Kanye West, Slayer, Tom Petty, Johnny Cash, Dixie Chicks, Aerosmith, Adele, Danzig, Red Hot Chili Peppers, System of a Down, Jay-Z, Black Sabbath. I can keep going for a very long time here. Most importantly, Rick is just an amazing human being. We became fast friends, which is surreal to say and is just an incredible honor. I felt truly heard as a person when I spent the day with him, eating some delicious Texas barbecue, talking about life, about music, about art, about beauty. This was a conversation and experience I'll never forget. This is the Lex Fridman Podcast. To support it, please check out our sponsors in the description. And now, dear friends, here's Rick Rubin. Are you nervous?
I'm not shaky, but I would say I feel uneasy. And I feel like soon we start talking, the more relaxed we'll get.
Yeah. Well, maybe we should sit in this moment and enjoy it, the nervousness of it. Let me start with Nietzsche. He said, without music, life would be a mistake. What do you think he means by that? Let's talk some philosophy. Let's try to analyze Friedrich Nietzsche from a century ago.
It seems like music has the ability to bring us so much depth in our soul that's hard to access any other way. And without it, there would be a loss beyond the pleasure of it. Feels like it.
Hey guys, so I guess we can wind it up for today. So I managed to finish skills section and work experience section, but what I thought was like skills section, I don't need to show that because I don't know, it will be not a stagnant kind of thing. I'll be upgrading it. I'll be reading every new things here and there. So I thought it will it's like a irrelevant part. I'm more of a journalist kind of engineer, so that won't make sense, I guess. So let me show you like what I have done, like how is the progress. So far, yeah, this is the progress. So currently, I have worked at Infosys. I don't know, like I haven't. I don't know what to put for description, but yeah, we'll figure it out. I'm currently here, Consenso Labs. Here, this is my present company, and here few icons are missing from font also, and also I have to align this. We thought, let's remove this section. That would be better, I guess. So yeah, I will remove that section. It will. Yeah, this looks good. Let's see how it looks on mobile. I have not done the responsive part yet, but we'll do that later on. Let me finish the layout first. Afterwards, we can work on the responsiveness. What if I had flex flow? Company, flex wrap of wrap. It's not wrapping. Oh, what a surprise. Yeah, we'll figure it out later. Hi guys, so yeah, I'm happy with the progress. So yeah, let's continue tomorrow. That's all folks. Thanks for watching.